Hey, you're listening to What the Sigma with Chad's Tax. Today on the show, gold is absolutely demolishing records and racing toward $4,000, while Washington plays the ultimate game of financial chicken, and what this means for your money. Look, while your elected officials are playing the world's most expensive game of chicken, gold just did something that should make every portfolio manager in Manhattan wake up in a cold sweat. We're staring at spot gold flirting with $4,000 like it's been planning this hostile takeover of your dollar-denominated assets since the Fed decided quantitative easing was a lifestyle choice. Here's the data dump your financial advisor probably isn't mentioning during those quarterly check-ins. 7 consecutive weeks of gains. Gold's up over 50% this cycle. Someone with serious capital allocation skills just went heavy on Spider Gold ETF calls, betting this momentum trade has more runway than a SpaceX launch sequence. Meanwhile, every economic metric that matters is trapped in bureaucratic loops because apparently keeping basic government functions operational requires more coordination than landing a rocket on a drone ship. The algorithmic beauty here? This shutdown, ostensibly designed for fiscal responsibility, is triggering the largest flight to the one asset class that historically signals currency debasement. It's like watching someone delete their backup files to free up storage space. But here's where the technical analysis gets interesting. Bank of America's quant team is flashing warning signals like a debug console on a failing server. Their technical strategist is pointing out that gold's trading 20% above its 200-day moving average, which historically means we're entering what goes up must come down territory. More after our break.
My name is Tom Sachs. I'm an artist in New York City. For nearly 2 decades, I have been collaborating with Nike.
Nike running is for runners, Nike basketball is for basketball. Nike craft is for everyone else.
When any asset jumps 130% from its lows, even the most aggressive momentum traders start mapping their exit strategies. Yet their own commodity analysts are saying hold the position. Fed accommodation plus inflation above target equals gold never declines. That's not market prediction, that's mathematical certainty. The real signal isn't price action, it's behavioral patterns. Central banks are accumulating gold like venture capitalists hoarding unicorn equity pre-IPO. When the world's second-largest economy starts treating your reserve currency like a hedge position, perhaps it's time to debug your assumptions. Your actionable intelligence. This transcends precious metal speculation. This is what happens when the most liquid, most trusted financial infrastructure starts experiencing liquidity issues and trust deficits. Gold at 4,000 isn't a milestone. It's a diagnostic output. The correction everyone's modeling? Inevitable. Markets don't scale exponentially indefinitely, and gold's exhibiting meme stock volatility with fundamentals backing. But corrections within bull markets are optimization opportunities for investors capable of systems-level thinking. The question isn't whether gold hits 4,000. It's what $4,000 gold reveals about everything else in your portfolio. This has been another fire episode at What the Sigma. Smash that follow button and tap 5 stars to spread the butter. Fortune favors the bold, baby.
Grab news. Thomas.